Wednesday morning. Welcome to Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Let's get right after it. Here's what's on my mind right now. Inflation in President Trump's late night TV show. The Consumer Price Index rose 2.7% in November, according to new data out today. The headline result came in below estimates for a 3.1% increase. Consumers are still being pinched by high health care, rent, and food costs this holiday season, though. On the other end of the spectrum, we have President Trump defending his inflation-fighting credentials in a nationwide address late Wednesday. We'll dissect what this all means to your portfolio in just a moment. The race to power America's AI infrastructure build-out is way underway. Trump Media and Technology Group and Tay Technologies agreed to combine in an all-stock transaction valued at more than $6 billion. The deal will create one of the world's first publicly traded fusion companies. This, the day after Bitcoin miner Hut 8 signed a deal valued at about $7 billion to lease a data center in Louisiana. The leases are backed by Google. I have Hut 8 CEO Asher Genoot coming up in just a few moments to talk about this one. But all hasn't been sunshine and rainbows for here so far this week on AI infrastructure deals. Oracle's largest data center provider, Blue Owl Capital, will not back a $10 billion deal for its next facility because of rising debt fears. And waking up Lululemon. A week after Lululemon said it would part ways with CEO Calvin McDonald, a source familiar with the matter tells me Elliott Management has taken a $1 billion stake in the company. It will push for a proven retail executive in Jane Nielsen to get the CEO job, the source tells me. Nielsen is a highly accomplished retail veteran who is the former longtime CFO and COO of Ralph Lauren. Shares more than doubled on her watch. So Jane is no joke indeed. Here in the Open Bid Roundtable, Kenny Polcari, Slate's own wealth chief market strategist and host of the Yahoo Finance Trader Talk podcast, alongside Yahoo Finance senior reporters Brooke DePalma and Inez Frey. Good to see you all. Kenny, big week for AI infrastructure deals. I don't think this Trump media deal was on my bingo card. When you saw this cross, what was your first thought?
No, it wasn't on my media card either. Listen, I think it's an exciting story, right? It certainly takes it to the next level. It's a fusion company versus a fission company. So it's like you said in your opening remarks, it's probably one of the first that's trading. So there's a long-term play. This isn't a 2026 or 2027 event. This is more like a 2030 event. So it's going to attract some long-term capital. It's all very exciting. So while I didn't expect it, I think it's a great headline when we talk about AI and kind of the future of where it's going.
Inez, of course, Tay, not created out of thin air. Company's been around for a while. 25 years of R&D in the lab, according to our friend Dan Ives over at Wedbush. I know you've been digging into this company.
Yeah, and it is a company that's backed by Google. It's backed by Goldman Sachs. And this, as you mentioned, is a fusion power company. This is a type of technology that creates hardly any radioactive waste. It's a carbon-free type of technology as well. And it is a technology of the future. Now, the DOE has been talking about fusion, and also has been even put out a paper on it back in October as well, a roadmap. So this combination of these two companies is important. Why? Because it is addressing the energy needs that for AI, for data centers, and it is also trying to position the U.S. as energy independent as well. So it is significant in that way. And this will give $200 million cash at signing to Tay as soon as signing, and also they've got plans to start construction on a fusion power plant for 2026. So it's a big deal.
Brooke, I mentioned Hut 8 at the top. They were a crypto miner, but signing a big power deal yesterday. Got the CEO coming up moments away. But the street seems to like this deal, and that stock is still has an upward bias here this morning.
Yeah, the stock moving higher as we make our way into today's trading session. It's up about 9.6%. Keep in mind, though, year to date, this stock has had quite the run. It's up more than 100% as we make our way towards the end of the year. And based upon what exactly the implications were yesterday that were announced, they now have this data center being built out with Anthropic down in Louisiana, which seems like is a hub now for these data centers. I know that multiple different other companies have also announced a similar, anticipation to build out down in Louisiana. Louisiana as well. And on top of that, too, this deal is backstopped by Google. There's a 15-year, $7 billion lease agreement with project financing from JP Morgan, Goldman Sachs. So definitely some validity to this company that was once known for Bitcoin mining. Now a complete flip a switch into this new approach for the company, and certainly Wall Street liking that decision by Hut 8.
And you're watching on the screen right now images of what this facility will ultimately look like. Construction has begun. Kenny, let me get back to you. What's the better trade here? Throwing a dart on some of these AI energy type plays, or you just go back to Google and Google's dominating Gemini 3, ride that pony?
I don't think you throw a dart. I think I think you become very methodical about it. I think the energy play is going to play a big role in, the theme next year and the year after, along with AI, because it's all connected. It's all infrastructure. It's all dependent on one another. So it's not a matter of one or the other. It's really a matter of both, and how you do that, whether you're going to pick company specific or you're going to do it more broadly via an ETF. You have to be, in my mind, you have to be in both spaces. It's not an either or.
Kenny, look, I'm no expert in fusion. I barely know what the hell it is.
Right.
And I'm no really true AI expert. I'm not building models. But I think for those who have been bearish on AI, I don't think companies like Google would be backstopping a deal like this if they didn't think the demand would be there. I mean, come on.
I'm not even sure how you can be bearish on AI, right? You can be bearish maybe on some stretch evaluation, but overall, it is going to be an ongoing theme, next year, the year after, and the year after that, and after that. So, no, I don't see that at all. And you're right, Google is not going to be backing this, or these other big companies, or everything you see, they're not going to be backing this if there wasn't some reality to it. So I think it's very exciting. I think it's going to be an exciting time for investors, and an exciting time in the space, in the sector.
And there's clearly a new layer to your commodities beat has been unfolded here in the past few months. That much is for sure. But Dan Ives makes a good point. A lot of these deals are happening because of pressure on the energy grid, and the grid may not be able to support all the AI infrastructure that we're going to try to build here.
Right, and that's the bottleneck that Wall Street has been seeing, is the energy demand that you will need for all these data centers, for AI. And by the way, one of the other backers of Tay is also Chevron as well. So this is certainly a play on what the future of energy is going to look like, and what the best source of energy will be for AI and for electricity going forward.
Brooke, maybe if we can get all this energy out there in the ground over the next few years, egg prices will come down. I was in that CPI report. The market likes the CPI report. However, you dig down, and there were clear signs of inflation still lurking, Burke.
Brian, well, good news there. Egg prices are continuing to trend lower year over year. I believe they're down about 13% yet again. We do have beef prices still sticky, though. But overall inflation coming in a bit lower than what had been expected from the street. Right now, CPI came in about 2.7% year over year. And what Wall Street had expected was about a 3.1% increase. Now, keep in mind, this is a bit of distorted data. We did have that lag because of the government shutdown. And so take this report with a bit of a grain of salt here. Also, keep in mind that next year, as we lapse this government shutdown, this will then be harder to have a year-over-year comparison of where exactly we are as far as month to month. We didn't get that in this report because of that government shutdown. And so while it was pretty welcome news, there were still some sticky spots, including beef, among others, that were within this report that definitely stood out. Beef's
out of control, Kenny. I dropped $80 on a brisket for Thanksgiving. I mean, this stuff is out of control, Kenny. I'm going to have to start switching to chicken.
Everything's a little bit, I have to tell you, it is a little bit out of control, and it is becoming a little bit frustrating. You even go, I have to tell you, I went to Dunkin' Donuts this morning. I bought 2 coffees and a donut. It was $10. I can't remember the last time that happened, right?
No,
when it hits you, when the girl says behind the counter, it's $10, I go, what? I bought 2 cups of coffee and a donut. It's $10. Like, it's crazy like that, right? But it's happening. It is happening all around. And that's what's frustrating to people, is that they don't feel like food prices are coming down. We can say it is. They can say all they want. But it's how you feel as a consumer when you have to put your hand in your pocket to pay that bill. When you get to the register and you scratch your head and you go, how did I get to that number?
Kenny, I know you're a big chef. You're going to have to swap out those beef meatballs for some, Beyond Meat meatballs this holiday season, Kenny.
Now, listen, I do traditional. I do veal, pork, and beef in my meatballs.
All right, fair enough. But Kenny, look, is this the perfect backdrop for investors? Like, I'm trying to figure out what takes the market down over the next month or so. I don't see it. If you're going to have inflation trending lower, you have a Fed still leaning, I think, to maybe one more cut. This is a perfect backdrop for a further push higher in the markets. Not to be a pumper of stocks here, but look, I mean, I can't find the downside risk here in the near term.
So I think the downside risk is going to be initially in 2026. I think it's going to be all political. I think it's going to be the midterm elections. It's going to be every House seat is up for grabs, right? So it's 435 House seats up for grabs. It's going to be all the new people showing their face. Where do they stand on the scale? Left, right, center. I think that's going to cause some initial kind of anxiety in the markets. But we know that geopolitical stuff and political stuff, create short-term chaos, but not long-term pricing in stocks. So I think on any of that chaos, any pullback that it creates is going to be an opportunity, especially in these hot spaces that we're talking about, tech and utilities and energy and infrastructure plays. I think those are going to continue to dominate. But look, I don't think we're going to get another Fed cut until May. This news today, while it was good, like Brooks said, it's a little bit noisy because we missed a couple of months in this, so you're not really sure. And so I don't think it's going to cause the Fed to, Jay Powell, to certainly cut in January, maybe March, but I'm betting that they're going to let it go until May.
Brooke, I'm not leaving until we talk about Lululemon. Now, I posted another very spicy take on this Lululemon news here with Elliott Management over on my Instagram account this morning. I'll let everybody check it out. That's my alter ego. I have to be a little more serious here on TV. But look, I think Elliott has a good point here. They need an accomplished CEO in there. They would theoretically get one in Jay Nelson, who they are pushing to get on this company. And if Jay does get this job, I mean, she's got to improve product. She's got to improve fit. And I think she probably has to also slow the pace of new store openings until they get all those other things right.
Well, Brian, I think it's worth noting that we did confirm that Elliott Investment Management does now have that $1 billion stake in the company. And so certainly they have a bit of a say here with who exactly could be the next CEO. But keep in mind, this search continues. They have until January 31st is when Calvin McDonald is set to officially step down. And then there's also a plan to have two co-CEOs, both of which are current executives, play as interim CEOs. And so it seems like the company is willing to give some time to this, some breath, to really find the right fit. And this fit really needs to be, what sources are telling me, needs to be focused on growth and transformation. They really need to find that touch, that feel, that energy, that pulse that Lululemon once had over the athletic community, over so many, so many other shoppers now have gone to others like Alo and Vuori and as well as Athleta even, and so many other companies now are up and coming within this leisure space. And so it seems like they're willing to give some time to be able to find the perfect fit to lead this company, to really reestablish that quality, that allure, that appeal that Lululemon once had with shoppers who are willing to splurge on $100 leggings. And in this sort of environment, it doesn't seem like that's the case, that consumers are even to spend that much. Some do say that they are, based on those that I spoke with over the weekend.
Well said, Brooke. Two quick changes for Lululemon. Make my medium fit like a medium, not an extra small, and take the stupid black tag out the back of the shirt because they're really annoying. Kenny, you don't even have any Lululemon. You're built like a bodybuilder. You're not wearing this stuff.
I know that. I'm 65. I'm not wearing Lululemon. I got to tell you.
Got to ask tough questions here. Good to see you all, Kenny. If I don't see you, happy holidays. And if you see a discount at Lululemon, pick some stuff up. Give it a try, man. I'll see you guys later. Appreciate it. It has been a huge week for crypto miner Hut 8. CEO Asher Genoot stops by for more details on his big AI power deal. We'll be right back. Keeping with the energy theme we've been hitting all week here on Opening Bid, Trump Media announcing a $6 billion merger with fusion power provider Tay Technologies. That has set the stock sharply higher. This coming the day after crypto miner Hut 8 announced a $7 billion deal to build a massive data center complex in Louisiana. Hut 8, of course, partners with another Trump family enterprise, American Bitcoin. Joining me now for today's Power Player, Asher Genoot, Hut 8 CEO. Asher, good to see you again. Congrats on this big moment for your company. Walk us through the process a bit, because I sense you have been very disciplined on arriving to this point. It was very, very important for you to not make just a bad deal.
We think that the value of energy will continue to go up. And so for us, we had to be patient and figure out what was a fair deal that added value to our customers, but that drove a strong return to our shareholders. And so the announcement of our deal yesterday, we had actually two announcements. One was an announcement with Anthropic to have the opportunity to scale with them for 2,300 overall megawatts. Then the actual deal we signed itself, that was $7 billion, was only 330 megawatts, which is 245 megawatts of IT load. And so for 245 megawatts of IT load, we announced a $7 billion deal that had a financial backstop with Google. And so we're very, very excited because it's the first domino to fall. If we're able to continue to scale and build up to that full strategic partnership on 2,300 megawatts, we see a lot of growth upside for the company. And the deal overall, not only did we announce that Google was creating a financial backstop, we had great partners like Fluidstack and Anthropic, but also that we had execution partners to deliver the data center, from JP Morgan to Goldman Sachs providing the financing, and to Jacobs Engineering and to Vertiv providing the contracting and the supply chain. This deal is fully packaged and signed to be able to deliver for the customer.
Yeah, Jacobs is really really one of those under the radar infrastructure plays. Really enjoyed following their story. For the average investor out there, Asher, why would an Anthropic need this much power? Break that down for us.
They're growing month over month. I mean, if you look at some of the public reports, their revenue has been increasing by $1 billion ARR every single month. And so as they continue to grow, they need additional compute to keep up with the demand of their users. And so they're one of the fastest growing companies in the world right now. And we'd like to provide the power first infrastructure layer to be able to allow them to keep up with that demand and continue to build out those models and those inference and training solutions.
How important was it that Google backstopped all this?
Critical. I mean, without Google, we would not be able to get JP Morgan and Goldman Sachs to commit to balance sheet financing to be able to give us up to 85% of the actual cost to build a data center for project financing, and at a really low rate of SOFR plus 2.25% target. And so overall, the clarity of Google backstopping, and think about this, it's a $7 billion deal. That's roughly $450 million a year. $450 million on average a year for 15 years for Hut 8 transforms the business. You look at mostly data center infrastructure multiples trade at a 15 to 20x multiple. That's somewhere between $7.5 to $9 billion of overall value. You take out the build costs, you're at $5.5 to $7 billion of equity value creation. And so overall, we're extremely excited because if you think about the company today, 330 megawatts alone is worth more than our full market cap today. In addition to that, we own 60% of American Bitcoin, which is another publicly traded company we have with the Trumps. That's worth about $1 billion. We have about 10,000 Bitcoin on the balance sheet. That's worth another $1 billion. And then we have 9,000 megawatts, 1,000 that we currently operate, another 8,000 of new development megawatts that I haven't even counted. And so we're extremely excited about the company, its future growth potential. I think this is the first step in showing the market we have an ability to take a site from the very, very beginning on a piece of land that we find to bring it to a commercialized AI data center.
Asher, what's the next step? Because if I have this correct, you have a pipeline. What does that pipeline look like? And are you just on the cusp of announcing more deals like you just announced?
Yeah, so when we announced this deal, creating a program with partners that could scale is really important. You brought up Jacobs Engineering. They have 40,000 contractors and engineers. You have Vertiv, one of the best equipment manufacturers within the whole data center space. Obviously, Goldman Sachs and JP Morgan have some of the largest balance sheets as banks. So we put together a group of partners that we believe could scale with us in our development pipeline. And so we spent this whole year creating that foundation, find the right customers who had the demand as well. And now it's about repeating this program again and again and again to start growing the value of this company. And we're extremely excited. And we think if we're on here a year from today, we'll have had a lot of headway in the scale that we were able to deploy and develop to our shareholders.
I'm sure you've seen these stories recently, Asher, of the difficulty building AI infrastructure, building out these data centers. You know, CoreWeave stock has gotten absolutely hammered the past 6 weeks because of delays in building out their sites. How hard is it to bring these sites to life, and what challenges do you anticipate over the next year?
So there's two things there. One is expectation management. We actually have told the customer we're going to deliver the data center, start delivering the first data hall in Q2 of 2027. That gives us ample runway and a conservative delivery schedule to make sure that we're able to push the deliver on time rather than be crunched on a schedule that's really tight already. And second, it's all about, do you have the local labor? Do Do you have the general contracting? Because there are so many of these data centers being built, are there the people to actually build and manage these? So with Jacobs Engineering as a design and engineering firm, we have an engineering group and we have a construction group. Then local contractors like MMR, Cajun, Turner, these are all local contractors on electrical, civil, mechanical in the state of Louisiana that have already committed to our facility and the manpower required to build this site. Then what goes into the data center? It's the actual supply chain. Vertiv is our partner from a supply chain perspective, delivering long lead time items. Many of those we're actually going to skid, so we can actually do a lot of the manufacturing and the assembly off-site. And so when we bring it on-site, it's a faster execution and deployment as well. So I think giving customers more conservative schedules, meanwhile bringing together a group of partners that are very committed to those expectations is critical. And that's why it took us a little bit longer to announce this deal, because if we just announced a customer deal, that would have been great. We would have to figure out how to actually deliver after signing the contract. Here, we signed all of these commitments at the same time. And so we're not only delivering a commitment to the customer, but we have commitments from all of our partners that they are going to deliver on that same commitment.
So the market rewarding Hut 8, also a couple of your competitors, but on the other side of the spectrum, you have the market worried about a company like Oracle and Blue Owl Capital, and perhaps Oracle having too much debt and Blue Owl Capital not supporting their initiatives. Is the market right to have those debt fears?
There's a lot of dollars being deployed into infrastructure today. And at the end of the day, these are long-term commitments. For us, we had multiple customers that we were negotiating, dealing with, and working with. And credit is so important. Is this a customer that in all scenarios, AI is strong, AI is weaker, but in all scenarios will pay on their lease obligations? And that's why having this Google backstop and this financial backstop on all lease payments, roughly about $7 billion throughout the course of this project, on all minimum power bills, about $1 billion, on other pass-through expenses like insurance, operations, taxes, and so forth. Having that commitment is critical because Google, in our opinion, is one of the most credit-worthy companies in the world. They have a strong core business through their search engine that is able to generate one of the best cash flows as a company in the whole world. Then they have Gemini. They have their own TPUs in terms of manufacturing their own chips. They own YouTube. They own Android. They own Waymo for car collection. I think the next frontier of AI training is not just text training of the web, but on video recognition as well. So if you think about all of the footage that they pick up in those Waymo cars, all of the video footage that they have on YouTube, we are massive believers, not to even mention quantum, which they're leading in as well. And so we're big believers that Google has strong cash flows, one of the best in the world, and that they also have a diversified business stream and is able to continue to grow and become a stronger and stronger business. And partnering with them, having their financial backstop and guarantee behind this project, I think has given us, our lenders, our partners, all a ton of confidence in the value of this specific deal.
Asher, good to see you. Congrats. I know it's a big moment for you and your teams. Happy holidays. We'll talk to you soon.
Thank you so much. Happy holidays.
Thank you. Coming up, Julie Hyman has you covered from Market Catalyst. We'll be right back.